Hey everybody, good morning. Good morning, good morning. Channel member Frank, Nancy, Clarence, channel member Joseph, channel member Arturo, Anthony, Tom, Helen, Cliff, Bob, channel member Bob, good to have you. Indy, Leah, channel member Brian, Darren, Gary, Rosalind, Robert, Mark, Craig, channel member Amy, good to see you. Francois, Lynn, Rick, Ed, Dan, channel member Dan. Good to see everybody. How's it going? How's it going? How's it going? We are here. And another relatively benign economic news day. Well, we are at it, right? Got the Strawberry Dreams Monster up here today. One of my favorite flavors. And I just can't drink the same flavor every day though. Gotta swap it out. And glad to have everybody. Glad to have everybody. We have now that was weird. Something moved on my desk there. Caught my eye. US debt payments are now $1 trillion annualized. $1 trillion. That is an insanely large number, if you ask me. Insanely large. Insanely large. I mean, it blows my mind a little bit when I think about it. Yeah, we're talking about, the debt payment in August came in the biggest on record. The biggest on record, which pushes the annualized pace up to $1.049 trillion right there. The annualized pace. And I know everybody's like, well, you're not showing screen. This is it right here. Right, look at this. Cumulative interest expenses over $1 trillion for fiscal year 2024. That's just insane numbers, right? I mean, holy guacamole. You gotta be kidding me. How are we, is this gonna start a debt spiral? I mean, everything's okay. Everything's fine. Now, look, we're climbing faster than we've climbed. And, look at the climbs. We do the same climb every year. We're getting into the next fiscal year is about to start. And start fiscal year 2025 for the government. Coming up in October. We usually get a nice big fat bump into December. This thing's gonna be well into the trillions of dollars. Could hit $2 trillion by the end of next year. And just absolutely wild right there. Absolutely wild. I don't know. I don't know what to say. I mean, that's just stupid, right? It's like if you try to run your family business that way, as in not a business, but you trying to keep your house payment made, your car payment made, food on your table, electric bill paid, medical bills paid, kids, grandkids, whatever. Try to keep, your family business going. You can't just keep borrowing money. Like eventually, there's no more. The credit's shut off, right? You're jammed up. I don't know. We'll see. I think we're in the red. We're in a problem. I mean, look at this budget deficit. Look at this. They say COVID was the problem. Look at that. Higher than it's been almost ever. And we're just stacking that. We got to run a budget surplus to be able to pay off debt. The fiscal responsibility is just absent. We just keep spending. We just keep making money. Keep spending money. Right? Party never ends. You can't spend yourself out of debt. That's exactly right. Like you can't. But why do we keep doing it? Why do we keep doing it? Yeah, it's a premium subscription to Zero Hedge if you want these charts. So just ridiculous right here. Wild. I don't know. You got me. You got me. Actually, it looks like they took it off premium, so you can just go to Zero Hedge and get these. It was premium last night. Now they've got it off premium, so it's they made it public for everybody. And you can just go to zerohedge.com. What's going on with gold? That ridiculous chart I just shared. That's what's going on with gold. People, it's the de-dollarization of the world, essentially. Hyperinflation is creating the situation where gold has to be more expensive in dollar terms. We're not, there is an official hyperinflation, but we're in a period of outsized inflation, and it's probably going to continue. We're probably just finished the first act. We're declaring it done. It's just the first wave. It's probably going to play out in 3 more cycles. We're entering Act 2 where everything's okay. It's going to come ripping back. This is going to take 5 to 10 years to play out, and everything's going to be like 2 to 5x more expensive than it was back before COVID. You're like, well, some things are already twice as expensive. We're talking across the board, period. Not just housing, not just this or that. We're talking about, like 5 times more expensive. Think about it. We're talking about like cars before COVID, $20,000. So now for, middle of the road cars, we're talking cars, $100,000 is middle of the road. And it just blows people's mind a little bit, but that's what we're talking about, that kind of inflation. Now, S&P did the thing I was looking for. Right there. Guess where the target is? Now, can we get a pullback in here? Absolutely. This is a significant resistance zone right in there. Watch for... I'd like to see it just go cruising. Now, if we get up here, this is the big warning. If we just stack gains right up into next Wednesday, FOMC day, I think the reaction is going to be that. Be prepared. All trading involves a substantial risk of past performance, not necessarily indicative of future results. I may never get another prediction right again. That may be completely wrong on FOMC. Past performance not necessarily indicative of future results. I'm just saying, just because I got it right before doesn't mean I'll get it right again. This presentation intended to be informational, educational, fun, entertaining. Hopefully you're entertained. Are you not entertained? And it is not a recommendation to be buying or selling any financial instruments or anything else. So don't buy stocks, options, bonds, forex, futures, cryptos, treasuries. Don't long them, don't short them, don't trade them. If you desire personal financial advice, hire and consult a financial advisor. That's not what I do. And don't buy stuff from gurus. Don't buy stuff from people like me. Don't buy stuff from me if you don't trust me. If you don't like what I'm doing. If you're just like, I took a chance. It's dangerous. Make sure you trust people. I put out this free content every single day to help build trust. Show you I kind of know what I'm talking about at least half the time. Sometimes I get lucky. Sometimes I don't. Sometimes I get it wrong. I called that big correction in August pretty bang on. For those of you that I won't, like, it was an emergency flip too. I was like, oh dang, this is going to dump. And it did. It did dump. Not proud of, the market dumping, but it. So next week, right there's the FOMC. 18th, 2 p.m. It's the big show. And then 2:30, we get Powell talking right there. It's the big show. That's coming up next week. Today, Friday, there's nothing. I mean, we get some consumer sentiment at 10 o'clock. So in about 33 minutes. Right there. We could get a little flash in the market, but I don't think it's going to be a major mover. We get that consumer sentiment almost every week. Right there. We'll see what happens. And it's the de-dollarization of the world is what's happening. We're just too stupid to know what's happening. Watch this. Hold my beer and watch this. We break down below this support. Here's the next support. There's the target. And we may flush it out even lower. Been looking for this move down here for a long time. And it can accelerate. We can go back to the bottom over here. We can definitely go back to the bottom. Right down over here. So, careful out there. Cutting rates increases liquidity in the system. So they say, prices go up. Now, the knee-jerk reaction, maybe we dip initially and then rip. Or we may pop and then drop. I don't think things are going to play out the same way we've seen. Just, I think there's a financial crisis brewing. And why do I think that? Why do I think that? Look at, here's my tell. Here's the tell. Right over here. This is the tell for me. And I really am annoyed with the background. I don't know what happened with the background here. Background solid, grid lines, horizontal, vertical. Why do we keep resetting? Okay, there we go. Much better. Save. Don't change. There we go. All right. Anybody remember that? Now, what is this chart? This chart is DGS2. It's right there on the screen. Delta Golf CR2. And I have added compared the Fed funds rate. We add the compare button right up here on TradingView. Click that button. And FED, FUNDS. That's the orange. There's the market open. So when the orange crosses above the blue and kind of floats out in space while the blue is going down, it's a leading indicator for a financial crisis of some sort. This one, you remember what happened there? God, the alerts. Freaking quit. Quit with the alerts. You remember? .com bust. You remember this one? See how the orange came up above the blue? The blue started leaving the orange behind. You remember what happened in this time frame? Great financial crisis. Anybody remember what happened over here? Everybody's like, when I say the charts were telling there was going to be a big crash, and I was expecting, like I was ready for COVID, like the chart was telling me right here. It led up into it. It was already written on the wall. We were going to have some sort of freak out. And we had the rates freak out. But then we had COVID freak out. Right there. Here we are again. Same story. Now, the thing I'm not sure about is if we cut rates now, kind of catch up a little bit, then all of a sudden inflation comes ripping back. Do we have to go higher and create an even bigger problem? It may be a dip all the way to the bottom, then a pop. I'm not sure. Not sure exactly how it's going to play out. I think we're going to go up here eventually. But right now, the blue, the market rate, this is not controlled by the government, this rate right here. This is set by the market. It's on the way back to the bottom. It's at 3.62. The Fed is sitting at 5.3. That's why they need to cut rates. They're way outside of the market parameters right now. In fact, They probably shouldn't have done the last 2 rate raises. They got way above the market parameters. They were late raising. As you can see, it took off before them, before they made their first move. Now they're late cutting. Probably should have cut. It shouldn't have done 2 rate raises back here. The last 2 should have just held right in there. Just hold, hold, hold. At that 4.75 to 5.0, should have held in that zone. They went too high. It's a policy error. It's going to show up. It's going to hurt. Probably going to result in some sort of financial crisis. It's written on the wall every time. Every time. Since I've been trading. There's no soft landing story. Hey, K Dukes, thank you for being a channel member. There's no soft landing. Anyway. Here we go. S&P. We're cruising. Like this is set to go. Probably going higher. Right there. Probably going higher. S5FI. I mean S5TW, excuse me. S5TW probably going back to the top. That was probably good enough. It's close enough. 26, close enough. S5FI. Only got the 50, but probably close enough. We'll probably make a higher high. Probably go up and retest this high. This dip right here back in April may have been close enough to the bottom. Now we need another high. S5TW. S5TH. I got to pull those over where I can see them. S5TH. Just consolidating. Now, we haven't really made a big high. Really stretched things to the top. So we may be on that path. Top this thing out somewhere around 90. Maybe 95. Before we really roll. So market's kind of set for a pop. ES overnight. Just kind of benign. Not really. We're on the path. We're set to go higher at this point. Set to go higher. Now, we could get a big pullback next week and set us up to go higher. In Q, still set up. This did that rocket ship pattern setup, basically. Double market roadmap bounce with a 618 test. This is basically set up for a large outsized move up. We could actually break on up 22,000. Yeah, that's an alert. What I have an alert for that? Potential breakout right there. That's a pharmaceutical, biotech. Potentially breaking on up 56 on SLNO. I don't remember why I set an alert on that. Russell has the same pattern or rocket ship pattern here. Maybe like, well, there's a lot of stuff drawn on here. Yeah, there is. We've talked about a lot of stuff for the last couple weeks. Here's the deal. 2 main patterns I follow. Roadmap line, bounce, which is the orange roadmap line. If you want that, links in the description, or click on the channel homepage down here. Click on my Jeffrey Termeyer logo under the video over here. Go to the homepage and watch the video that says my favorite indicator with some arrows and the orange line running behind my head and my face. Like, click on that, and it's a DIY. Like I tell you how to code the indicator yourself if you want to. And if you're more of a, I'll pay you $5, just give me an easy button. The link is in the description. Click the more button below while you're down there and think about becoming a channel member. Right there. I do post content for channel members that's not made public. And so Russell has this potential roadmap bounce. Did it here, did it here. Target's still up here. Now, what it also did on this secondary roadmap bounce, it came down and found support at the 618, which also is the roadmap line. So finding support at the 618 is a measured bounce on top of a roadmap bounce. So it did a double roadmap bounce and it did a measured bounce. This, when it combines a measured bounce and a roadmap bounce together at the same exact point right here, this becomes what I call the rocket ship pattern because it has an outsized potential to launch off higher. Not just reaching this target, but possibly reaching up here to 2,500. Possibly. It's not a given, it's just the opportunity. That rocket ship pattern shows up on NQ and Russell. So this gives the opportunity for an outsized move up even higher. Now, another one that has this same pattern that I'm really excited about. Look what's happening. Same exact pattern. Double roadmap bounce. Measured bounce combined with the roadmap bounce on the secondary. That's the rocket ship pattern. Watch for this one to explode higher. It may not stop at the ideal target. It may go cruising, but 35 is the zone where I'm kind of expecting it to head to right now. Possibly 37, possibly 40. Could get a little extra spicy there. Extra spicy. Like this one's been lagging behind gold, and it has an outsized potential to go. That's where we are right now. Oil. Based on some fundamental stuff, I did build a long-term position here on oil. I used UCO. I bought a January 2026 27 contract. I sold a 37 contract. That gives me $10 worth of up. It's about a 3-to-1 really. With the cost, it's about a 3-to-1 risk to reward. That means I gained 3 potential for every 1 I risked on this position. If it goes out way past 37, I don't make no money. But I do have some $40 calls sitting out there. 40 strikes sitting out there to January 2026 also. Had those for a while. May add to them. We'll see. So GC pushing on up. Cruising. There's the... Why is it going up? Who cares? The chart says we're probably going up. I've been predicting we're probably going up to 2,700. Well, it's 2,680. We're probably going. We consolidated for a couple weeks. Now we're going. We didn't retrace. So now it's just an extension. Last time we roadmap bounced all the way back down here. Cruising on up. And I got to flip it back. So we're looking at that 2650, 2680 area right up there. Doesn't have a good ideal. It's not the fib. That's not the right fib line. It has the target on it. There we go. Why did it stop right there? That 2618. Now we can go cruising. Look, 3,000. 2,900. Be a good next target. We could see 3,000. We could see 5,000. 5,000's in the cards up here. 44. Yeah. That's just that pullback. We go and get this one. What are these numbers? 9,000. Things get really spicy in gold. We consolidated for a long time. Now we're breaking out. Now we're running. Look at that consolidation. Happened from 2020 all the way to 2024. 4-year consolidation. Next leg. How big was the last leg? Just do it this way, right? Bring that over. Compare. Right there. 3,000. That's just an echo. I'm moving my target, moving my alerts here. So all I did was just take this move and project it off of this low, 3,000. 2,900, 3,000. Close enough. It's just an echo in the market. That's make a lot of money off these over the years. I was long here. Got out here. Got long. I've been long several times, but I got long real in a real way, like right here. Got more long right in here. And we're riding. Here's the target. Silver's probably coming along with it. Gonna outperform. Bitcoin. God, so many alerts today. Stuck on that roadmap line on the futures. This may need some action over the weekend without the futures market open to clear this up. We are still down here away from the roadmap line on the daily. We did kick off 3 green days in a row on both Bitcoin and Ethereum. That typically leads to continuation. Right now, Ethereum not getting it, but it might. And Ethereum might need one more dip down to a lower low. Something lower than that low right over there. Nice crooked line. Lower than that low. We may need one more dip over the weekend before we can rip. Maybe what we're waiting on. Maybe. Certainly looks like it. Dollar, as I said, here's the support zone. We get below it. Here's the next one. And then target down here. NKD, first move up. I expect it to break through the roadmap line again, break through this prior high, these 2 highs, and get continuation higher. Probably go cruising up to 44. If it does that, you know, if we're already cruising next week when the FOMC hits, we're probably going on up after FOMC. RH, what's popping and what's dropping today? It's just more sideways. Right off of support. Lower highs. Don't really expect anything off of this. I mean, could it go higher? Sure. Does it look awesome? Nope. PGR. Progressive Insurance. Popping a new high, but retracing that very quickly. We may come back to the roadmap line. We got through the upside target there. This may come back to the roadmap line right in here. Oop, missed the right in there. Watch for it to break back down and come back down. Find support. It's been a long time since we've been down there. Look at that, all the way over here, August of last year. And it's curious, this was rallying while the market was pulling back into October. This finished its rally in July as the market topped out, and then it went on a rip. So it's been outperforming. Oracle. Dang. Next extension, 178. And eventually we're coming back to the roadmap line. Eventually. We played that move out pretty beautifully. If you're still long, protect your profits. Know where you're getting out. Have an exit plan. TNON. That's a giant dumpster fire, isn't it? Reverse split. Yeah, I think that's been on the list already this week. What a nasty chart. TIL. If you don't understand why it's a nasty chart, don't trade it. That one's another dumpster fire. Highly likely this is going to come right back. Man, you could, if you can afford puts on this, unless they just announce they're Curing cancer. This is probably coming back down. TIL is a nasty chart. First solar, still consolidating under the resistance here. We break out, going up to 324. OMIC, another dumpster fire. Watch out below. That one you could probably short also. Hey, Chris, thank you so much for being a channel supporter. Dun, 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 dun. BST, hanging out in the zone. Ugh, come on. Come on. Need to break higher. 90 is the resistance. Well, maybe on up to 95 even. If we get above that 113, 120, but hang out at that resistance, we could possibly turn down. Downside for that, possibly down here around 56. So here's the long and the short of it right there. Bigger downside risk on that one. ARM. Oh, can we break through the resistance? That's the question. That's the 3-wave up so far. We may get a little extra. Could come all the way up to... So I'd definitely watch all the way up to this level right here. We do have significant resistance here. We've got resistance here. Watch this right here. If we turn down, can come all the way back down. Gap fill. Gap fill right over there. Messy. Messy. My hand's not steady today, apparently. Drawing with a mouse. Anyway. All right. GEV. This one was on the list the other day, too. Popping. There's no roadmap line. It hasn't been long enough since the split for this to have any chart history, anything like that. So it's pretty, can't really do much. It's not like an IPO since it's a spinoff. I don't really have any statistics on spinoffs, so can't really speak to that as being a reliable pattern. IPOs have a pattern, and SPACs kind of have a pattern. Real estate investment trusts have a pattern, but the splits there's like 3 major split patterns, and not reverse split patterns, but regular split patterns. Reverse splits obviously have a pattern that. There's 3 major split patterns. I don't remember them very well, though. That's the problem. I'll have to see if I can find it. There's a whole, it's like one of the first systems I ever learned. There's a whole set of calendar days around a stock split that you can watch, like how it's performing into those calendar days, pre and post split. And if it's up or down, it'll tell you what it's going to do for like the next 6 months after the split. It's pretty crazy. That was the first pattern I ever learned. It was extremely difficult to keep up with. At the time, there were splits happening galore. And it'd be like, I think 5 a week. It was just incredibly difficult to keep up with, especially when I was working a full-time job and just new at this. Stuff like TradingView didn't exist. And trying to do all the work to keep up with that was just really, really difficult. I'll have to see if I can dig it up. It was like an audio CD. Wayfair, maybe holding the bottom. Resistance there at 52. We could go back up to the top at 84. Just, I don't know. Etsy, next target down around 45. App, yeah, launching off. Look at that. Next target up 117. Labu, this is leverage on biotech. Be careful. It's just been consolidating. Basically, it's been in this range for almost 2 years. I guess almost a year. December 24. I'm like this a whole year. It's gone basically nowhere. There. That'll be a whole year. So not a long time ago. Has setups for going up and down, and biotech is unreliable and leverage is unreliable. Those 2 things that I've got these. I've got, that's biotech warning. And then I've got, oh, didn't do it. Cool. Nice. I messed it up. There you go. Leveraged. So it's leverage and biotech. Yeah. Be careful. Be careful. All right. KB. Perma cautious. Was that close enough to count as a bounce? Maybe. Maybe. Nice pop. Kind of expected it to hit. And it got below on the 4 hour, so it could be a 4 hour bounce. Break above that 63, 64 area. Looking for 68, 69 area. DG. Is this the bottom? Could be. Could be. That's buying a knife catch at the moment. There's no good indication that's done on the downside. Got to get back up through. Golly, man. That roadmap line is dropping out fast. It's going to have to fill that gap before I'm interested in that at all. AVGO. Yeah, silver's moving. Are you surprised? Are you seriously surprised? I tell you something's going to move for weeks, and then, holy cow, silver's moving, huh? AVGO, if we can break above 173, 193. Decliners, Adobe, right back to the roadmap line. Who could have guessed? Didn't even touch the target on the last pullback. Right back down. So the scary thing here. JT, why do you have that resistance? Comes from all this. That's where the 76 was. Watch out for the bigger pullback on Adobe. You only get lucky sometimes, so. Silver's moving? Are you kidding me? Meta. Well, Meta fired off the entry back here. This is a lesson in, look at this, length of time, duration. So the average trade takes 24 bars. That's 24 bars. Guess what? Hadn't gone anywhere. Can it take twice the average? Maybe. Maybe. That would be right out here. 48 bars. Oops. Moving the. It's going to be right over here. Let's see if we get there. Target land is right up there. I could pop right in here and just past. This is why I warn. Average, like using these statistics right here, trades may last longer than the average. All right. Averages, take two. One's above average, one's below average. All right. You've got 9 in the history, not a statistical population. I don't know how much I'd trust the average until we get closer to 30. And just because it's on the list doesn't mean there's any options for anything. You may have to short that one. Now, is PDD the bottom? We've been debating that for a couple days. It may go on down. 81 may go on down. And just because it's on the list, I don't know if there's options. You can go look. If you don't see them, they're probably not. That's kind of the way it works. BA, overnight, making a lower low, down to 55. This could be the bottom. This is like the place I've been looking. Now, we could extend this. Like, don't just buy the knife. We could extend it on down here to 45, 145. Entirely possible. This would be a final flush out here, potentially. Once we find a bottom and break back above the roadmap line, this is game on for a big potential rally, possibly up here to like 600. Now, this could take a long time. It could take out to 2030, 2035 to get up here, but it's kind of in the chart that we may see an outsized move. Now, it also could fail, and that's why you don't just buy now. in a big way. It can fail and fail. Like, it hasn't shown that it found a bottom yet. And this, I did play a little move up here, got out, waiting, haven't gotten back in. So be careful on BA. Has the opportunity to go higher, but it hasn't proved we're going higher. mRNA, cutting their R&D budgets. Not looking too great. Probably going for the target down here at 51. If we get a little spicy, we could go down to 38. Acting more like a biotech. Guess what? mRNA vaccines, just not the stuff of that everyone wants to get involved in. BioNTech, look at that crazy pop. That was on the decliners list. Now it's on the poppers list. Boom. Reversing fortunes very quickly there. That's still a big bearish pattern, though. So that's the bubble pattern. That's what I see right there. I warn about this all the time, right? The bubble pattern. Anybody heard me talk about that before? Anybody new here? Never heard the bubble pattern? Like, same pattern we see on NVIDIA and SMCI. Fingers, get on the right keys. Look right there. See the same exact pattern playing out. The bubble, that was the COVID, BNTX was the COVID pop, the COVID bubble, if you will. SMCI, AI bubble. NVIDIA might very well be the AI bubble. Be careful. Just saying. Same pattern. Whatever the hype is, whatever the thing, whatever the trade, whatever they say is the trade, when it ends, watch out. Watch out. I brought a couple bonus trades today. First off, FNV. Now, it's been stuck in this range for a long time, but here's the deal. We don't need a giant move to get to the target on this baby. Right there is the entry. 133.97 is the target. Thank you, Rodney. Thank you for being a channel member, Rodney. Dun, 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 dun. So the statistics on this baby. These are, these are not the best. I'll just admit this right now. These are not the best bonus trades I've brought lately. Amazon yesterday was probably the best in a long time. I actually got into that one. If you want the details, it's inside Discord. Right here, FNV. Here's the official target. 134.26. Stop below 112.95. Profit win rate. Historical win rate, not the best. 63.64. Profit factor, 1.785. That's pretty strong. Only has 11 trades, though, since 2011. There's your setup. There's your entry trigger. And here's your target right there. So looking at that on the real chart, that's the stuff right there. There's your entry trigger, and there's your target right there. It's actually 134.26. I don't have the fibs. I don't use the snap thinger to put it right on the money. 130, yeah, close enough. 134.26 right there. That's the stuff right there. Now I brought another one. KR Kroger. So this one, why am I not like super hyped up on Kroger? Let's go through it, shall we? Oops, I just messed that up. Open copy, not. Pop back over here, grab this, go paste on there. Here's Kroger. 56.54 target, stop below 49. It's only $1 move on the upside. Only 81% win rate. That's much better, but the profit factor is negative. Negative, Ghost Rider. That is a net loser, even with the banging win rate. So this is a be cautious, know where you're wrong. Maybe you don't want to risk all the way down here. Maybe you just want to risk to the 618. Be careful though. Be careful. These last 62 trading days on average, over 44 trades. That's a lot of trades since 1968. It's been around a long time. That doesn't mean it was listed in 1968. That's just when my backtest data started, was 1968. So been around a while. There's the target. Dollar move. Not the best upside compared to the risk. So there you go. There's the move right here to right here. And 56.54 is the target. Not a large upside, but there you go. There you go. And that could, very well could kick off the bigger potential move. See, this is a nested potential, just like we have on NASDAQ and Russell. 618 bounce, actually pushed down to 786. Not as awesome. This could, I'm not saying it will, it could kick off a bigger potential up here to 60 maybe, which would be in line. This roadmap bounce right there put us in line with that $60 price target area. So this actually, if you were aggressive, you actually could possibly go for a little bit bigger target than just the 56.54. If trading Kroger is the kind of thing that is attractive to you. Remember, all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This thing could just, maybe because it's been a net loser in the past, it's going to start outperforming. I don't know. Maybe because it's, had a banging win rate in the past, it's going to start underperforming and start losing a lot. I don't know. Be careful out there. That's what that kind of means when we talk about past performance, not necessarily indicative of future results. Just because historically it works out doesn't mean it's going to keep working out. All right. All right. S&P bias, probably bias into FOMC is higher. I'll have to see. Make sure you come back on Tuesday and Wednesday and find out what I'm saying next week on this baby, because things are going to I think things are about to get spicy. I'm definitely rolling into FOMC with protection trades on. I am not going insurance-less into portfolio. I'm buying portfolio insurance next week. So if you want to see what that is, come hang out. I'll probably talk about it on Tuesday and Wednesday. So make sure you next week's going to be an interesting week. Now, also, buybacks are pretty much wound down for the quarter. 55% of S&P 500 companies after today are inside their buyback blackout window for earnings next month. So things are going to slow down a little bit. We have quad witching, and we have the end of the quarter, end of the week, end of the month, into all the things for options coming up next Friday, right after FOMC. It's going to be a wild ride right into Friday, I think. Is it wild ride up? Is it wild ride down? I don't have the charts to tell me yet. Right now, it looks like we're going to pop into FOMC. If we get up here, I'm really nervous. We might. You need to protect some profits. That'd be my big overarching guidance heading into FOMC next week. If I said anything that was helpful, beneficial, make sure you give me a like. I'll see you on Monday, 9:15. Same bad time, same bad channel. Make sure you subscribe. Make sure you hit the alerts. Make sure you set a freaking reminder in your phone. Come hang out with me. I'll see you later. Be careful.